NuScale Power Corp is trading right now at 21.48 USD, up a massive 1.81 or 9.20% so far today. This price action is catching everyone off guard because the narrative around this company has been fairly bleak for the last few months. If you have been following the ticker SMR, you know the volatility has been enough to give even the most seasoned trader whiplash. But while most retail investors were busy looking at the red on their screens over the last quarter, a major shift was happening behind the scenes that just broke wide open this morning. Bank of America just upgraded the stock from underperform to neutral, and they did it with a price target of $28. That is a huge vote of confidence for a company that many had written off as a speculative experiment that ran out of gas. The immediate insight here is that the market is finally beginning to price in the difference between a company's current bank balance and its long-term contract pipeline. Most people look at the earnings miss from late 2025 and see a disaster. NuScale reported a massive loss per share, much wider than anyone anticipated, but that loss was largely due to a massive one-time milestone payment and internal restructuring. While the surface-level data looked like a reason to sell, the institutional players were looking at the cash position. Ending the year with over $750 million in liquidity is not the sign of a dying firm. It is the sign of a company that is bracing for a massive build-out. This creates a fascinating loop where the stock price is jumping because the reality of their capital reserves is finally overriding the expectation of a slow decline. When we talk about the expectation versus the reality of NuScale, the general belief is that nuclear power is too slow and too expensive to compete with modern tech plays like NVIDIA stock or even the high-growth phase of Tesla stock from a few years ago. Investors often treat SMR like a lottery ticket. They expect it to either go to 0 or hit 100, but the reality is much more nuanced. Unlike many smaller tech firms you might find on various investing sites, NuScale is playing a long-term infrastructure game. They aren't trying to sell an app, they are trying to build the physical backbone of the next century's power grid. When you use tools like Schwab Intelligent Portfolios or browse through your individual brokerage account, it's easy to get distracted by the daily swings. But the real story today is about institutional credibility. Looking at the recent movement, we are seeing a significant spike in trading volume that accompanies this 9% jump. This isn't just retail enthusiasm on the Robinhood app or people doing some light online investing on their lunch break. This is the kind of volume that suggests major funds are reallocating capital. Institutional activity has been quietly building. We see names like Vanguard and BlackRock maintaining heavy positions, and even Samsung C&T has been increasing its stake. They are seeing something that the average person looking for quick investment help might miss. The regulatory path is clearing. In May of 2025, the Nuclear Regulatory Commission approved their uprated 77-megawatt design. That was the green light the industry needed. It moved the company from a research phase into a commercial phase, which is exactly why Bank of America shifted its stance today. The daily swings in SMR can be brutal, often moving 5 to 10% on no news at all. This is partly because it's a favorite for those involved in Robinhood stock trading and those using the SoFi trading platform to find high beta plays. But if you look at the sector momentum, nuclear is becoming the quiet AI play. Everyone knows NVIDIA stock is the brain of AI, but SMR technology is becoming the lungs. Data centers need massive, reliable, carbon-free power. Solar and wind can't provide the 24/7 uptime that a massive server farm requires. This is where the Tennessee Valley Authority Agreement comes in. It is one of the largest programs for small reactors in U.S. history. If you are self-investing and looking for a way to hedge against the volatility of Apple stock or other big tech names, the energy sector is where the institutional funds are flowing. Let's talk about what NuScale actually does, because it's often misunderstood. They don't build the massive, sprawling nuclear plants of the 1970s. They build modules. These are small, factory-fabricated reactors that can be shipped to a site and plugged in. It's a manufacturing approach to energy. Think of it like the way Tesla stock investors look at the gigafactory, efficiency through scale and repetition. By building these in a controlled environment, they avoid the massive cost overruns that have plagued the nuclear industry for decades. This business model is about reducing risk for the utility companies. If a utility needs more power, they just add another module. It's scalable, and for an investment professional, that scalability is the most attractive part of the long-term thesis. Comment below how many shares of SMR you currently hold, or if you think nuclear energy is the only real way to power the future of artificial intelligence. I want to see where the sentiment is sitting after this morning's move. Now, we have to address the risks, because no online investment is without them. The recent earnings report showed a GAAP loss that was quite jarring. While they have the cash, they are still burning through it at a significant rate. They recently initiated a $750 million at-the-market equity offering. For those of you using a Fidelity trading platform or an Interactive Brokers account, you know that an ATM offering means potential dilution. Every time they sell more shares to raise capital, your individual slice of the pie gets a little bit smaller. This is the reality that often keeps a lid on the stock price. The expectation is that they will need even more capital before the first commercial reactor is fully operational and generating steady revenue. The macroeconomic pressures are also a factor. High interest rates have historically been a headwind for capital-intensive industries like nuclear. However, as we move through 2026, the market is beginning to anticipate a more stable rate environment. This makes the long-term debt needed for these projects much easier to stomach. If you are using SoFi Invest or checking your Fidelity IRAs, you're likely seeing a rotation out of pure growth and into hard assets. NuScale fits that bill perfectly. It's a tech company that builds physical things. That is a rare combination in a market that has been dominated by software for so long. Institutional activity is also showing a bit of a divide. While the big index funds are buying, we did see the CFO sell some shares back in December. Usually, insider selling is a red flag, but in this case, it seems to be part of a pre-planned tax strategy or a simple diversification of personal wealth. It hasn't dampened the spirits of the analysts at BofA or the traders on the Interactive Brokers platform today. The volume is telling us that the market is looking past the insider moves and focusing on the 2026 catalysts. One of the biggest things to watch is the IAEA summit in March. This is where global leaders will discuss the safe transport of nuclear material, which is a massive hurdle for the modular part of SMR's business model. If those regulations get streamlined, the path to international deployment in Europe and Asia opens up. When you look at your Fidelity brokerage account or your Robinhood investments, it's important to remember that SMR is a high-conviction play. It isn't like buying a broad index or even a stable blue chip. This is a bet on a fundamental shift in how the world produces power. The tension I mentioned earlier between the expectation of financial struggle and the reality of a massive government-backed energy transition is where the profit is made. If NuScale can hit their milestones in Romania and with the TVA, the current price of $21.48 will look like a steal. If they hit another delay or the regulatory environment sours, we could see a return to those mid-teens. The trading platforms are busy today. Whether you're using the Robinhood app to check your Fidelity mutual funds or you're deep into technical analysis on the Interactive Brokers trading tools, the consensus is shifting. We are moving away from the if they can do it into the when. The fact that Bank of America feels comfortable moving to a neutral rating and setting a $28 target tells me the floor has been established. They are essentially saying that the downside risk is now balanced by the massive upside potential. For someone looking for investment help or managing a SoFi active investing account, this is the kind of signal you look for. It's not a blind buy recommendation, but it's an acknowledgement that the company has survived its most dangerous phase. As we look toward the final section of this analysis, we have to consider the future scenarios. In a best-case scenario, the 2026 IAEA events lead to a standardized global licensing framework. This would allow NuScale to sell their reactors like they're selling cars. In a worst-case scenario, more dilution is needed, and the first commercial deployments get pushed back towards 2030. This is the tightrope that SMR is walking. If you are using a SoFi robo-advisor or an intelligent portfolio, you might already have some exposure to this sector through Fidelity ETFs or other clean energy funds. But for the individual stock picker, SMR represents the purest play on this specific technology. To summarize the central insights from today's movement, the jump to 2148 is a direct reaction to institutional validation. The expectation was that NuScale was drowning in a sea of cash burn and project delays. The reality is that they have built a massive fortress of liquidity and have secured the most important regulatory approvals in the history of the industry. The contrast between the two is why the stock is up nearly 10% in a single session.